Bitcoin can't be manipulated by humans, unlike the US dollar. In this video, I want to explain to you what exactly I mean by this. Let's get started. I get a lot of comments from people who claim that because Bitcoin's price isn't going up in the last 8 months or so since November, Bitcoin has just pretty much moved sideways. People think that it's being manipulated. They think that it's being held down somehow. I don't know how that would happen. Maybe the whales are selling, maybe the institutions are selling, maybe they're using futures, whatever they think that's happening here. But I don't consider that to be true manipulation. Real manipulation is when the market makers and the regulators can stop you from trading if the price drops too much. They can stop you from selling. And this is where circuit breakers come in for the S&P 500. So the S&P 500 has something called a circuit breaker, which is a regulatory measure that temporarily halts trading to prevent excessive price declines during periods of market volatility. This is manipulation. They're triggered by specific percentage drops in the S&P 500 from the previous day's closing price. There are 3 levels of circuit breakers, each with a different percentage drop and corresponding action. So we can see here the 3 levels are level 1, a 7% drop triggers a 15-minute trading halt. If it happens before 3:25 Eastern Standard Time, if it happens after, trading continues unless a level 3 halt is triggered. Level 2 is a 13% drop in the S&P 500 triggers a 15-minute trading halt, and level 3 is a 20% drop. It triggers a halt for trading for the rest of the day. The purpose of circuit breakers is to stop panic selling and to promote orderly trading during periods of extreme market stress. They provide a timeout for investors to reassess the situation and to make more informed decisions rather than simply reacting to price movements. It's almost like you're in kindergarten, and if you do something wrong, you can no longer keep doing it. The teacher is putting you on a timeout because they don't want you to do what you're doing. So the S&P 500 is stopped from trading because regulators don't want you to sell. They want you to just hold. When people say that Bitcoin is being manipulated, they don't see how the S&P 500 is being manipulated. They don't see that regulatory authorities do everything they can to stop the S&P 500 from going down. Because the S&P 500 is centralized, all trading is centralized, they just stop trading. They stop you from selling whenever you want to. So if something negative were to happen in the market, let's say World War III starts and you want to get out of the S&P 500, if it falls too much, you can't sell your shares. This is manipulation. They're manipulating you to keep your shares in the S&P 500. This is true manipulation. The S&P 500 dropped 7% shortly after the market opened on March 9th, 2020, triggering a level 1 circuit breaker and resulting in a 15-minute trading halt. March 12th, another 7% and then another halt. March 16th, another 7% and another halt. So within a few minutes of the market opening, you could no longer sell your shares because the market was paused. What kind of market can be paused? If it's a global market, why can it be paused? It's because these markets are not real. These markets are the most manipulated ones in the world. Bitcoin isn't being manipulated. The S&P 500 is being manipulated. The S&P 500 can be stopped from trading if the price drops too much. And this is why I think that nobody can stop Bitcoin. If Bitcoin's price is going to fall, it's going to fall however much it has to fall before sellers stop panicking. If Bitcoin's price has to fall 90%, it will. If it has to fall 95%, then it will. This is because Bitcoin is a real market with a real good, while the S&P 500 is a fake market with a completely fake good. The S&P 500 shares aren't even real. Humans cannot stop Bitcoin. They can't manipulate Bitcoin. They can't stop it from trading. The only thing that you can do is you can sell your Bitcoin. You can make the price fall temporarily, but eventually, when the price falls enough, buyers will step in and they'll start pumping the price back up again by taking the supply that you're selling out of the market. You can only sell your Bitcoin once, while in the S&P 500 and in legacy markets, you can do something called a naked short, where you can sell shares that you don't even own. You can't create real Bitcoin out of thin air to sell it because the people who actually understand Bitcoin won't accept paper Bitcoin into their wallets. Now, the same people who manipulate the S&P 500 and legacy markets, they're trying to get you to buy paper Bitcoin, where you don't actually take self-custody of your Bitcoin, you leave it with an exchange, and now they have full control over your asset. By not taking self-custody of your Bitcoin, you're allowing your exchange to sell Bitcoin that's not theirs. And eventually, at some point, let's say you want to take self-custody of your Bitcoin. If your exchange has sold everything into the market to bring the price down, they can't give you your Bitcoin back. And this is exactly what happened with FTX. And what exactly is paper Bitcoin? Paper Bitcoin is Bitcoin derivatives that don't involve direct ownership of Bitcoin. So if you don't have Bitcoin in self custody, you don't have Bitcoin. If you have Bitcoin on an exchange, it's just an entry in some database that they have in their own servers. Paper Bitcoin is an IOU. It's basically like a fractional reserve banking system with US dollars, but with US dollars, they can create more if if the central bankers collapse. So if a bank doesn't actually have your money and you try to withdraw it, in theory, they could print more and they can give it to you, or they can borrow from other banks and they can give it to you. One of the craziest things that I've ever seen happen in the current financial system, the US dollar financial system, which is basically the world financial system, we can see here. As announced on March 15th, 2020, the board reduced reserve requirement ratios to 0% effective March 26th, 2020. This action eliminated reserve requirements for all depository institutions. So they can lend you money, but they don't actually have to have money. They can create more money out of nothing and they can give it to you so that you can spend it on whatever you want to. And right after this happened, I don't think it's a coincidence that the M1 money supply had this steep increase in supply from March till June of 2020. It went from $4 trillion all the way up to $16 trillion. The M1 money supply is the most liquid form of money readily available for transactions in an economy. It includes physical currency in circulation and demand deposits held by individuals and businesses. It is a key indicator used by central banks to gauge the overall health and liquidity of the economy. So as soon as the reserve requirement was dropped to zero, the M1 money supply increased by 4 times. This is why you saw the price of assets increase right away. And again, it's not a coincidence that this happened right after these circuit breakers. We can see here March 16th was the third circuit breaker, while on March 15th, they announced that the reserve requirements are now zero. The current financial system is the most manipulated one of all. They can literally create money out of thin air and they can dump it into the market to increase the price of assets, and they can make themselves wealthier because the wealthy people, the bankers, are the ones who own all of the assets to begin with. They create more money out of thin air to increase your demand for real estate, for stocks, for bonds, for everything, so that the prices of all those things keep increasing forever and you have an incentive to keep buying them. If the world goes to a Bitcoin standard, we'll see how these assets really perform. Humans can't increase the supply of Bitcoin, so fewer and fewer Bitcoin are going to chase all of these goods in the market. And over time, you're going to see that the price of everything decreases because people don't have the same amount of Bitcoin that they had before. They have to spend it. The labor that they have is worth less and less in terms of Bitcoin. So they're able to spend less Bitcoin on the things that they want, meaning that overall the market price is going to decrease. On the other hand, the S&P 500, the real estate market, the bond market, all of these are manipulated because the Federal Reserve allows its banks to create more money out of thin air if investors want to buy those assets. So if you want to buy a house and you want to take on a mortgage, your bank is just going to create more money out of thin air. When people tell you that Bitcoin is being manipulated because the price isn't going up, it's not because it's being manipulated. It's because those people don't have a long enough time horizon. They want quick results. They want to get rich quick. They don't really care about what Bitcoin is as an asset. All they want is more US dollars. So Bitcoin isn't actually being manipulated. It's just being sold by people who own some. They own it, they sell it into the market, and then they can't sell it again. If you're avoiding Bitcoin because you think it's being manipulated by humans, then you're missing out on the best asset in the entire world. And I think you're going to regret it in the next 10, 15, 20 years because clearly you didn't do the research to figure out what Bitcoin is and why it can't be manipulated. If you're holding on to stocks and real estate, you have to understand that those markets are completely fake. They're both Ponzi schemes. They're being supported by fake money that can be created out of nothing.